Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. Well, it was heartbreaking for all of us to watch the match yesterday, especially after how well India played throughout the series. But that's what's so amazing about live sports and how things can change so quickly. That also reminds me of the recent moves by the US dollar. I mean, dollar index ended up below 104 on Friday as euro had a good rally. We are also seeing fall below 7.25 in the Chinese yuan. In fact, right now even below 7.20. So there is a broad dollar weakness all around, but rupee remains immune as always. Good morning, JK. Your quick take on the match as well as the recent moves by the dollar.
Good morning, Swaraj. Yes, I think, 1.4 billion people, heartbreaking result. The law of averages ultimately caught up, but it caught up at a crucial moment when we should have. Now, as a hindsight, I feel it should have been better. We had lost one of the earlier matches, so that in finals would have fared better. And also, I think. More than anything, I think what made this match different was that Australians had come well prepared for India's strength and strategies. So that's how they were very well prepared, more than any other team, more than themselves when they played first time against India. I think that mattered a lot. So they played very strategically and they were well prepared for the big event. So that's what mattered. Yes, coming back to our core focus on the markets. Friday was much less in terms of the news, but we did have some data from UK. UK retail sales dropping once again. And the annual retail sales actually tumbled 2.7% versus 1.5% that was expected. And all the inflation and high interest costs actually mattering a lot as far as the inflation numbers are concerned. And I think it highlights the pressure that the households are feeling, which the Jeremy Hunt's autumn statement will take note of. Whether they will cut taxes or not, that depends upon their expectation of inflation going forward. But no major reaction. In fact, pound has strengthened after the data. We'll come to the currency part later. Housing starts and buildings in US was the other data of interest. Both of them were above expectations. It's a signal that builders in US are starting to feel a little more optimistic about the economy. Perhaps the recent fall in the long-term interest rates make them feel that eventually buyers will come in and therefore they're actually getting into more building activities. So these were positive points for the US economy. So what it did to the stocks, stocks were not really rallying on Friday because they have been consolidating after the huge rally that we have seen this month. And in fact, S&P 500 was 2% higher for the week. And in fact, for the month, it has been up 7.6% and NASDAQ 9.9%, in fact, and these are very big moves. And so we are already near less than 3% of the peaks from where we had fallen in the market. So good rally in the stocks, but rally further, we need more triggers, and that's what one would look for. We some more time to get some more triggers like the core PCE inflation and perhaps the next jobs number. These will be the big. Of course, before that, we'll have some PMI surveys. Generally, markets don't react so much to that. We'll probably look at the geopolitical tensions and the Xi and Biden meeting, which market is now perceiving as a positive overall, because the very fact that they met together in person, although on the sidelines of another global event, still seen as a positive factor. And therefore, I think China markets, I think they have probably looking up now. Chinese one already looking up, and have been seeing more than one big investor saying that they are ready to reinvest in China. So these are good news for the market sentiment as well. On the yields, of course, we had the 10-year that broke the 4.40 support, but closed above it, but nothing major to change the trend. We will probably see the result of the 20-year bond auction that is scheduled for today. And a good result there could push the yields further lower. We have the Fed minutes also this week, which the market will be looking out for in the absence of any other major data. The yields in Germany and Britain also fell to their lowest levels in the recent months, and that's actually pricing in actually 100 basis points of rate cuts even in the euro area. So that's how the markets are jumping the gun, but hopefully we don't have another surprise in the oil in the inflation. Oil prices, of course, have jumped 4%. I mean, this 4% jump is actually taking back the fall that we had seen last month. Now, this has come on the back of Saudi talking of extending their supply cuts, along with potential more cuts by the OPEC as well. So I think we need to wait for these developments. In Asia also, sentiment has been supported by apparent easing of US-China tensions. On the dollar, DXY is weaker again in Asia. Euro and GBP continuing their gains despite a steady stream of negative data, giving us conviction that it's more of moving away from the dollar. Of course, reaction to the lower yields in the US is also seen, but yes, we are seeing euro moving towards 1.10 psychological level in the coming days. Significantly, yen has broken 149. I mean, stayed below 150 on a weekly closing basis and broken the 149 level also. A gradual move lower is what we are seeing. There is talk of some leadership change that can happen in Japan because the rating of the current PM has been dropping very heavily. So these political events could also spur some movement in the yen towards the lower side or the dollar lower side. I think on the current commodity markets also, I think there has been a good movement after the commodities have picked up, led by the oil prices. Then on the rupee, nothing much again. We are again trading at the closer, higher end of the weak rupee. So this is actually leading to the sharp correction in the RER, which was closer to 105. I think we may be now closer to 102, looking at the moves that has happened in other currencies and also the Chinese yuan. I don't think this is likely to change much until we have some indications on the election outcome, which will be known in the next 10 days. So I think some movement is possible post the state election results in India. So also being on India, there is a lot of social media hot news talking about India reaching 4 trillion economy. This is as per a screen grab from the live tracking of GDP feed that is available for all countries on the IMF website. But while it has been lauded by several people, the official reaction from either the finance ministry or the National Statistical Office has not come about so far. So we will wait for that. And yes, it's a good news. It's a milestone, but nothing immediately important for the markets. Thank you.
Thank you, JK. And of course, we are seeing a continued trend of a narrative which is going on, is that the central banks will be easing quickly next year. And that's why we are seeing a fall in dollar and a rally in euro and GBP and all those other currencies. This is despite the fact that on Friday we had the UK retail sales, which dropped quite significantly on an annual basis. But basically, this theme has led to yields moving lower. 10-year broke below 4.40, but there are some more auctions lined up. So a positive reaction to those auctions will lead to the yields pushing lower, even lower. And it was not just the story in the US, but even in Europe as well, that the yields were falling. This week, of course, we have got the Fed minutes. If nothing else happens, markets will look forward to that data. And for rupee, election outcome in the next 10 days would be something to watch out for. But given how other currencies are gaining, even our currency, maybe the RER will correct right where by being right where it is. So these are some things to look out for. Thank you for listening, and tune in tomorrow for the latest in the financial markets.